G'day, Ryan. How are you, mates?
Yeah, good, good. How you going?
Very well. Good to chat with you again. And we're going to chat today about the monthly issue that you put out last week on DeFi. But before we get to that, mate, there's been quite a bit happening in the crypto markets over the weekend. Do you want to give us a bit of an update?
Yeah, so basically on Friday, we seen a huge movement up in the Bitcoin price. Went up almost 10% over the trading day, which is 24 hours a day in Bitcoin terms, but it went up about 10%. Um, which over the weekend, we've seen a number of altcoins going up even more, 20, 30%. But the big deal with that is, I mean, we see these movements in crypto all the time, big moves up, big moves down. But the big deal about this move on Friday was that it happened when the broader markets all had a fairly bad week compared to recent times. You know, and you had like the tech focused Nasdaq was down, the main indexes were all down. And in the past, people have tried to say Bitcoin seems to be fairly correlated with general sentiment. So when, speculative assets are up, crypto's up, and when speculative assets are down, crypto is down. But, one swallow doesn't make a summer, as the saying goes. But the fact that this happened and so strongly when general markets were down was very interesting. And I think it's something that a lot of people will start to be watching closely.
And I guess one of the other things I wanted to point out is that around the same time last week, the US dollar broke out to multi-month highs. Now, all I've sort of read in the past couple of months is, especially with all this, the Federal Reserve monetizing the debt, large fiscal deficits, etc., is that the US dollar is going to zero, the US dollar is going to collapse. Yet the US dollar is actually rising. And if we look at it from a longer term perspective, the US dollar has actually been in a bull market since 2008, in the same way that gold has. And what you've just said there is that crypto is almost this hedge against broader maybe market instability. But I guess what we've tried to argue in this service is that this is a hedge against a systemic, systemic issues in the monetary system. And we're seeing all three of those assets that we've talked about, US dollar, gold, and cryptos more broadly, or Bitcoin in particular, continuing to rise. It's pretty interesting to see that correlation, right?
Well, exactly, because that anyone that's done research on these, that is how they see Bitcoin. They see it as a hedge against fiat collapse or problems in the fiat world. And then we had our guest that was on earlier this year, Greg Foss, who explicitly said that he saw Bitcoin from his background in credit markets and bond markets. He saw it as sovereign debt default insurance, and he put an estimated value on Bitcoin of $150,000, $200,000 just on that basis alone. And a lot of people that understand Bitcoin, that's the way they've always thought of it. But there's a lot of speculative money in Bitcoin and crypto that maybe doesn't understand it so well. And so in the past, people have tried to say, well, it's correlated with the Nasdaq, the tech-focused market, and then at times it has been. Other times they've tried to say it's correlated with gold, and at times it has. But I think as this price discovery plays out and people come to understand what this asset class actually represents, it will start to diverge. And like you said, it will start to be seen as long-term as a safe haven asset, which sounds strange to say, but it will be seen as people move money into the US dollar when they start to worry. But as we know, the US dollar system is actually one of the principal systems that's in trouble. So where do you go after that? Well, gold was the one in the past. And like you said, that's potentially in a long-term structural uptrend as well. But people are now looking at Bitcoin as something, better than gold potentially, and especially in the digital world. So I think as more people come to understand that, we will see Bitcoin become non-correlated to the speculative sector. Although, of course, it is still very speculative in nature, especially within the cryptocurrency space. In a way, Bitcoin especially does fulfill a function which is very safe if you look at it as we do, as a system that is in free fall almost.
I think it's also worth pointing out that the US dollar rising is not necessarily being bullish on fiat currency, but it does suggest that there is something wrong with the financial system. Generally, a weaker US dollar, I guess, is an indication of plentiful liquidity and capital flowing around the world, all those sorts of things. And the US dollar system is providing liquidity to the rest of the world. But when the US dollar gets stronger, that's suggesting that there's tighter liquidity. And yes, it's a fiat currency, but it's probably the strongest fiat currency, and it will be the last one to fall. So its strength actually reflects weakness in the system. And I just wanted to make that point to clarify it in case there was any confusion as to why fiat currency was rising.
Well, I think that's the pathway. You've got to think of the end result, but you've also got to think of the pathway. And in a world where people are losing confidence in fiat systems, and that comes in all shapes and forms, it becomes in losing confidence in your banks and your politicians and your Federal Reserve members, who seem to be in a bit of trouble at the moment with potentially gaming the system. So as people lose trust in that system, generally, like you said, they're going to move to the strongest fiat currency first, because that's what they're most familiar with, and that is the US dollar. So like you said, the US dollar rising as part of that pathway to something else is probably the most likely course. It will be interesting to see as that plays out, at what point does maybe gold and Bitcoin diverge from the US dollar and rise even stronger, because then you've got the first glimpses that people have lost faith even in the US dollar, which I think will come at some stage. But you've got to think of the pathway of that as well as anything else, really.
Well, speaking of pathways, it's one of the things that we talked about when we launched this service, this pathway to a new money system. And in your monthly issue that you published last week, you found a way to, I guess, really benefit from this sort of shift to new money from a decentralized finance perspective. Do you want to just take viewers through that recommendation? And I think one of the things that we talked about was the potential huge benefits from this if you take a longer term perspective.
Yeah, so the monthly recommendation, it was quite involved and it was quite a lot of information in it, but it was all about this emerging opportunity in decentralized finance, or DeFi, which we've talked about a lot. But what I wanted to get across probably today more is how big that opportunity actually is. And I tried to say that in the update on Thursday, where I talked about how if you consider that Amazon, when it emerged in the 90s as online retailing and it was disrupting retail, and we've seen Amazon grow to become the biggest company in the world, or one of the biggest companies in the world, through disrupting bricks and mortar style of retail, which is big, but it's nowhere near as big as disrupting the $22.5 trillion banking system is. And that is exactly what DeFi is disrupting. And what many people don't understand is how much progress they're actually making in that. We've seen the DeFi industry spring from almost nothing just a few years ago to an $80 billion a year industry already. Some projections think that will go up by 10 times even within the next year to an $800 billion a year industry. And that is the very definition of exponential. So this is an exponential trend, and exponential trends, they can be risky, but the most return you're going to make is the earlier you get on them, and then you have to just ride the volatility and hold on. So it is coming, I think, and it will be a volatile rise, but it will be faster than what people think. And I don't think people understand how much progress has been made in that 3 years. Last week, we had a big French bank called Societe Generale, a huge French bank, who actually made a proposal on the MakerDAO project, which is MakerDAO is one of the projects we've talked about a lot. They allow you to lock in assets to create a synthetic US dollar. And so the proposal Societe Generale made to the MakerDAO ecosystem, which is made up of token holders of that Maker token who can vote on proposals. The proposal they made was to allow a certain type of bond in the real world to be used as collateral in this decentralized system. So it gets a bit technical, and I don't want to really get into that too much today, but just think about this. 3 years ago, we had people calling crypto a complete scam, people on JP Morgan and things like that. Now we've got one of the biggest French banks making an actual proposal to use something as collateral in that ecosystem. So this is a huge shift we've seen to big players in finance start to experiment and take this decentralized finance ecosystem more serious. We've had a decentralized trading platform called Solana get an $18 billion valuation with big investors such as Andreessen Horowitz. And the founder of Solana said explicitly, he said, we're not competing with other crypto projects. We're competing with the NASDAQ or with the New York Stock Exchange. And what they do, and this is something we've said in the service a lot, what they do is they get rid of all these middleman functions that the NASDAQ and the New York Stock Exchange need to function. So they put it all on the blockchain. And by doing that, they become super efficient. You don't need T+2. You don't need 3 days to settle on a stock trade. Yep. You can do it within minutes. And so you've got all these things happening in the background. I never read about it in any of the mainstream press. The mainstream press only talk about Bitcoin when it goes up or down, or there's some sort of scam somewhere. But all this stuff is happening, and it's a snowball gathering steam, and specifically in that DeFi space. So I just really wanted to get the scale of the opportunity to a bit more clear to people. That it is a huge opportunity, and it'll take time to play out. But an investment now in 5 years, you might be very surprised how far these things go.
But I think what's especially good about this type of investment or recommendation is that you're not necessarily punting on one type of DeFi project, right? You're not sort of backing a horse at the very early stages of, I don't know, the Melbourne Cup and not knowing how it's going to run the 2 miles. We've got a little bit of money on each of these projects, and it sort of self-manages itself, right? Can you just explain how that works a bit better?
So the investment recommendation I gave at the end of it was something called a DeFi index, using an app called Ember Fund. And what that index does is it automatically buys into a basket of leading DeFi projects. And then it rebalances every month based on which of these projects is growing and which ones are falling. So what it does automatically without you having to think about anything is it makes sure you stay on the winning projects and you cut the losers. But to take it back a step and look at the big picture, I think the analogy I gave you before this meeting was, if you were looking at the internet in the mid-90s and you saw this this new thing called search engines, and you sort of managed to piece together that search engines are going to be a big deal in this World Wide Web to help people look for information. At the time, there was, I think there was hundreds of search engines at one stage, but there was 14 leading ones in the mid-90s. And for you to pick Google out of that, which turned out to be the winner, would have been very hard. I mean, Google was 2 blokes in a garage. You had Microsoft, which was already a big company, had a search engine. You had Yahoo, which was turning into the market leader. So for you to try and find Google in amongst all that noise would have been very hard. But if you could have just invested in the concept of search engines, then you would have landed on Google anyway, and you would have reaped the benefits of the exponential growth in the valuation of Google without having to specifically pick it. And that's sort of what this smart DeFi index does on this app. It automatically just leverages you to the projects in that industry, and it will just change over time. If better projects come along, then it will automatically put you into them and get you out of the losers. So it's a really low maintenance, low hassle, and comparatively low risk way to do it, because you're not trying to guess which ones you think will win. You're just trying to say, hey, DeFi is going to be, I think DeFi could be huge. It might not be, but I think it could be. It's worth a part of my speculative capital for, a 5-year investment. I'm going to invest in that space. So very much like how people invest in index funds and in stock markets as well, but just does it with a bit of a crypto twist.
I hope you enjoyed that preview from New Money Investor. To get access to the full video and much more, please click on the link below.